Hi, it's Gail with Traders Help Desk, and this is a trade on the USD JPY. I believe it's going to go up, so I'm going to buy one contract for the 101.77 strike, a 1 p.m. expiration. Now up here right in the corner, you can actually see that there's about an hour until expiration. Now, one of the questions that I get asked a lot is, do I take a full loss when I have a negative trade? So I'm going to explain to you now. I went out one strike greater than where price is currently trading. For example, right now, price is trading near the 101.73 strike price. So let's say that it goes against me and closes down here at this strike price. I would exit the trade. You're going to be just about half on your loss, but that can vary depending on whether you have an hour left or whether you have 4 minutes left till expiration. So what you want to do is watch it, and if this were suddenly to pop down and close below this strike price, then I would exit the trade and I would cut my losses, because then my trade setup has changed. In other words, I would not be anticipating the market to continue up. Instead, it could actually be reversing. Okay, as you can see, it's right beneath the strike price. It's trading at 768, 770, 771, but it seems to have formed a congestion area here. So, and this is where you have to decide whether you're going to stay with the trade for the remainder of the time and risk losing the $40 that you paid on entry, or stay with the trade and perhaps it will close above the 101.77 area and you would make $60. In this case, I have not put in a profit target. It's either I'm going to make money or I'm going to lose whatever I paid in risk, and it was about $40 on this particular trade. Now, since there is still a lot of time left here, I'm going to leave it. And by a lot of time, I mean 8 minutes for this to stay above 101.77 would be sufficient, okay? So you're not looking at a great deal of time, but for the USD JPY, for it to move up 1 pip or 2 pips, that would be pretty easy in the next, 6 to 7 minutes. So we're going to stay with it, and I already know that there is something there that is holding price up. So that also makes a difference to me. I have my own indicators that I use, and it's telling me that there is a level that will support price to go up. So we're going to watch and see if it actually does stay above 101.77. And it's very, very important to understand that on the binary, it just has to close at 101.771 or expire greater than 101.77 to actually produce the profit that we want. And you can see that it's going back to this area, but it is supporting price, and that's exactly what we want to see, is support in this area. And that's, the price bars are actually showing you that they're unable to break through the 101.77 area. That's good for our trade. That's what we want it to show us. Okay, again, you can see it is still above 101.77. My trade setup has not changed. Now, for those of you that are wondering why it's staying above the 101.77 area, this chart actually shows you that there is a plus sign with dots on it. That's telling me that this area is going to support price. You see that the volume is actually confirming there are no sellers in this market. So if there's no sellers in the market, then typically it's going to stay above this area. Now, we had a magenta peak. It did pull back to the ATR like we anticipated. The volume said it would not go below this area. And as you can see right here, it's at 101.772. Now, since price expired greater than 101.77, we actually realized the full profit potential because the binary paid out $100. Now remember, we were risking about $40, so that left us $60 in profit simply because it closed 2 ticks above our strike price at 101.772.